Welcome back to the Crypto Moses channel. Before we dive in, I just want to let you guys know it's not financial advice. I'm not a financial advisor, but I am a crypto nerd trading and making dough doing it, so I know you can too. All right, now picture this. You open up a chart, the candles are basically dancing, prices flying, and you just have no idea what's going on. I've been there so many times, even when I didn't think I was there, I still felt that way. And that's why today I want to cut through any of the chaos and I want to dive into 5 powerful indicators that are going to help you read the market with confidence. And this is what I've been doing for years. So whether you're trading Bitcoin or altcoins or even your next beam moonshot, let's get right into it, okay? And a quick understanding, you guys, cryptos can move anywhere from 1, 2, 5, 20% in a single day. So it's so important to have the capability to catch these momentums and make money on the way up or the way down, which is why I actually trade on centralized exchanges. Now, the first one that I really do like to use, but it is not the be all tell all, it is called the RSI. And this is the one I use. I only use this one because it gives me the bearish and bullish divergence signals. And what that is, you guys, is when an RSI indicator basically tells you momentum, okay? It determines momentum. Okay, so, and it is also a lagging indicator. So you don't want to be using it as the main indicator to make a decision for entry and exit. But what it will let you do is it will give you a confirmation from what you've already decided on price action and some of these other indicators I've got listed. You're going to want to stay till the end because I've got a special one at the very bottom that really explains some of my strategy and how I'm able to make thousands of dollars a day just literally trading crypto every day. Now, one thing is my RSI is actually at a different number, and I want to put that out there just so everybody can see it. I actually use the 80 and 20, where mostly people use the 70 and the 30. I like it just because it gives me an extreme notion of, okay, we're oversold, we're overbought. It's just very important for me to have that extra difference of that 10 snapshot percent is kind of how I look at it. Now, the second one that I really like to use consistently is called the MACD. And I actually don't have it on this chart here, but it's the moving average convergence divergence. And here's what it looks like. Okay, and what the MACD does is it's also another lagging indicator. And this is so important because the MACD honestly gives us two things. This histogram, which shows us the trend change, but then this line, which is basically the momentum shift. This is what we mean. See, when it crosses over here, we're going to get a drop, and when it crosses over under, we're getting a line up. And it's the same. Look, we've got the bullish divergence there, we've got the MACD divergence here, and it's about the same thing. You can see it again. This is low, this is high, this is high, this is low. Divergence, you immediately understand that there should be a reversal coming within this trend right here. Okay, then we've got the most important but one of the most difficult to read, and that is the volume. Okay, and here volume is basically just spikes. I have it all lumped up because I just like the green and the red and then to see the length of the spike. But basically volume is how much of this asset traded hands at that period, right? And we're sitting here on a 4-hour chart. So on this 8 p.m. mark, we've had, let's just do here. On this 12 p.m. mark here, we've had about 7.82 million Fartcoin in this example that I'm using traded, right? So that's something to think about when you're trading volume, right? A big price jump, but with weak volume, that's really sketchy. That's not sustainable, right? Now, but if the volume surges with the price, that's conviction. This thing is going to stabilize and we're not going to get a big dump back, right? Now, for example here, SHIB's latest rally ran up by like 40%. No way, it's 3 trillion tokens traded. Right, so you can see the value of volume and where it shows you how much actual people give a shit about what's happening. It's not, if you've got fake volume and you've got a big price move, it's just somebody basically buying in, hoping to raise the price a bit to dump on us. So you want to be smart about volume. And then lastly, I really like, well, not lastly, I've got one more left for you guys, and that's my secret sauce, but second to last is moving averages, right? They're basically our trend GPS. Moving averages are also a lagging indicator. I do use 5 moving averages here, right? We've got 1, 2, 3, 4, 5, but these 5 are broken down into two ways I think of it. We've got the white and the yellow, and those are our big moving averages. The white is the 200, and it's basically taking the last 200 candles and plotting a point there, giving me an average, okay? And as you can see here, this white line crossed over the yellow, and we've had a downtrend ever since, which we call that the death cross, okay? And the yellow line is the 55 EMA, so it's doing the same thing as a 200, but it's calculating only 55 candles, right? And this is also showing a downtrend, which shows you that we are in a downtrend, right? Because of that. Now here, if it crosses again, we will be in an uptrend. And you can see that here everywhere. Anytime we've had the death cross, we've been down. And anytime we've had the golden cross, actually, I don't even think it crossed down there. It crossed right here. Look at that. From that golden cross, this bad boy rode up thousands of percent. Holy shit. This is why Sui got so big. 500%, right, in no time. So that's what the golden cross and the death cross means. And then I've got some of these really small lines in there. Now these little blue, green, and purple, they're just the 13, the 8, and the 20 moving average. Yep, so we've got the 8 here. We've got the 13, I think it's the 2021 moving average, and they just kind of give me the immediate trend at the very, very closest level, because usually when you're looking out all the way, it's hard to see what's happening directly with the chart. So that is also why I really, really, really like those. Just very, very important to think about. You need to have the right indicators used together in confluence before making a decision. A big thing I really, really like too, or why I use BTCC, is because it's got the trading view chart right here, and you can add indicators right from here. Very, very, very easy. Makes it simple as hell. And there are so many options, but find the ones that fit your narrative the best and are easy for your eyes to actually spot. There is a BTCC link below. They're giving a $10,000 deposit bonus if you use that link, so it's free money. I definitely recommend using it to your advantage and using it to trade wisely. Now, one of my favorite indicators, okay, and this is our best one to honestly recommend, it's going to be the Fibonacci Retracement. I've used the hell out of this to make a lot of buying decisions, and it has served me well. Like, for example, okay, let me show you guys this. From here to here, it's a 1 day, 14-hour play, okay? And we had our top and our bottom, right? And we did the fib retracement. We take it from the top, we take it to the bottom of the channel or of the trend that we see here, and we boom, see that it hit back the 61.8, which would have been a perfect short position to ride down the wave, especially if you're leveraged. If you're not leveraged, it's not going to be huge, but the 2.41% is a lot on leverage. That is a lot, and that's the power of fib. Fib is honestly one of the most valuable ones. You're always going to be looking at key levels like the 61.8%. I also do like to look at the 78.6%. They just act like magnets during pullbacks, and if these things retrace to those zones, we're going to see some really, really good entry points. Now let's recap some of these edges that we gave you guys here, right? Here's your indicator cheat sheet. First, we've had the RSI, which basically measures momentum, okay? This bad boy up here measures momentum. Then we talked about MACD, which is going to be spending the trend shifts, okay? Then you're going to be looking at volume, which is going to confirm the strength of either trend or direction. Then we're going to be seeing the exponential moving average or the simple moving average, which is those lines I showed you, and those are what allow you to basically follow the trend. And then lastly, Fibonacci is what's going to help you create your entries and your exits, and that's what allows you to plan a lot easier. Now, no single tool is a magical tool, but you can stack them together and you can stop trading on hype and actually start trading on a structure. Okay, now these indicators are how you're going to be able to go from just guessing to hopefully getting a better thought process and getting better guesstimates. What you want to do is test them, combine them, trust your data more than your emotions, and do a lot of back testing. Let me know in the comments which indicator you like, or which one maybe I could have missed that could have been a great tool to have in my arsenal. Okay, good luck trading, everybody. Until next time, stay informed, stay prepared, and stay ahead. Peace out.